Hello friends, welcome to my channel and thanks for watching this video. As we have ended with one more good week in the Wall Street, we are here for a big ride which has started from the lows of June 2022, and in the last one and a half month we have seen a very good move as far as the equity market is concerned across the globe. And let me tell you one thing, that if I just scroll down and show you the headline, the US economy has yet to face its biggest recession challenge. Now let's just understand one thing very clearly. First, do not compare or do not try to connect main economy with the Wall Street or with the stock market. And if we are indeed, the second point is, if we are indeed in a big global upside, stock market upside, and remember one thing, and this is the common saying, that stock market will always climb the wall of worry. So if we are in a bull market, it doesn't matter, because understand one thing, the psyche is, people think when everything settles down, stock market started moving higher. No, it does not work like that. Stock market is a future discounting machine, so everything which is about to happen will get discounted, and it will start somewhere, or the rally will start somewhere at the middle of the crisis. Okay, and then when the crisis end, you will see stock market nearly doubled or tripled, and stock will go up like 5, 10, 15, 20 times, okay, before the things actually normalizes. Then again we are talking about the inflation, or the earnings and all those things. In the middle of the crisis, things won't look like that. So with this positive note, I would say I welcome you all to another session of USA Weekly Market Report. And as far as the stock market is concerned, it is definitely climbing the wall of worry, and that is a very clear signal. And as far as the main economy is concerned, let me tell you that things are, I am nobody to tell anyone. Every news is in front of you, and things are not at all looking good. You are talking about geopolitics, you are talking about health crises, you are talking about inflation, you are talking about recession, you are talking about whatever you want to talk about, black swan event. Now culmination of all this thing, I think itself is a black swan event, and irrespective of this event, you can clearly see how stock market is performing. Isn't it enough for you to prove that there is no direct connection between mainstream economy and the Wall Street? So let's quickly analyze the important news, then we are going to discuss about the rest of the things. And US 10-year treasury yield jumps after job growth. So job growth data was indeed very strong last week, and things, or let's say the dollar index suddenly spiked, and then the yields suddenly spiked because of the strong data. And apart from that, I don't want to talk about geopolitics here, so I'll keep it away. But yes, if you are engaged more and more in geopolitics, obviously it will have a direct negative impact on the economy, because you are shifting your focus, you are shifting your money, everything will be on, will go to do the geopolitics, and you are not focusing on the actual problem, what's happening inside your economy. Apart from that, let us see if there is anything. No, we don't have much of information over here. Now there is a spending bill which is also there, which is in the news, and if it get passed, it will have an impact on US inflation market or data as well. So that's also something which we have to focus on, but that is not yet finalized, so I will keep it, for the time being, keep it away from this discussion. So we don't have major developments as far as stock market is concerned. As I told you that there are lots of worries, but stock market always climb the wall of worry. With that, let us see how things moved up. So the last Friday was flat, Dow up 76 points, Nasdaq down 63 points, S&P down minus 6 points, so everything is flat. Gold, has touched the low of 1700 and now it is near 1800, down minus 14 points. So there is a good move, and I have talked about gold, I think last week or the week before that. So I have talked about gold, and I have specifically said the 1720 was the level. So there was a good swing that has happened as far as gold is concerned in the last 2 weeks. Apart from that, the oil falls down to 88, so that's a good thing. But this is not at all related to European economy. European economy has different challenge. They unnecessarily put themselves in a position where the people are suffering. So this is what you can see, how things are going bad because of some bad decision. Anyways, apart from that, what do we have here? Apart from that, natural gas, and I've already talked about natural gas. It is holding higher above 8, and this is one of the big problem, not oil, because natural gas will become a daily need or daily requirement as far as the western hemisphere is concerned, because the winter are extremely chilling and natural gas is a part of the daily requirement, and things are not at all looking good, and that's what the prices of natural gas is indicating right now. Apart from that, as you can see, the yield started moving up, and the bad thing is the short term yield, like 1 year or 2 year, has actually shot up, and it is trading above 5-year yield, which is 2.9 and 2.8, which simply means that there are risks in the next 1 and 2 years. What I was looking at is 3-month and 30-year. Once it diverges, once 3-month yield surpasses 30 years yield, then it would be a problem. It would definitely be a big problem. Problem has already started because the 1-year yield surpassed 5-year, 10-year and 30-year. This is not a good sign, and if 3-month yield is going to do the same thing, and the interest rate of 3-month yield more than the interest rate of 30-year yield, is a big problem. Let me tell you, something big will happen. Market will again become volatile. Apart from that, US dollar is giving comfort, and the kind of things that are happening in US economy, the dollar strength look wobbly right now, because beyond a certain point you are talking about inflation, you want to make your economy strengthen, that's fine, but is the actual question is whether the economy is in a good shape to take that hit. You continuously want to rise interest rate, but beyond a certain point things will start crashing, and it will crush down like anything. It's not only about the oil, the housing demand, the stock market, the job market, the retail sales, the CPI, industrial, everything will start crushing down beyond a certain point. So that's where the risk lies, and we have to see that, because the bond yield is indicating and that's very important to understand right now. And I have already shown you, I think, the yield curve. I think last week I have already shown you the yield curve, so if somebody haven't watched that video, please go and check it out. I have explained what's happening over there. Now let's go to the chart and let us see what's happening as far as the chart is concerned. So this is Nasdaq, and Nasdaq right now is having a good run, I would say, after a sharp fall, and Nasdaq is the one which has seen a good fall or a big correction in the last couple of months. Now what lies as far as the price chart of Nasdaq is concerned? So Nasdaq will move up to 13,000 or probably towards the 200-day moving average, which is 13,600. This will definitely change, but these are the two levels that Nasdaq is indeed looking at as far as the upper end of the range is concerned. And please keep your stop loss, because this is just a short covering right now, so please keep your stop loss at 12,322. okay, so this is what you can do right now. As far as Dow Jones is concerned, as far as Dow Jones Industrials is concerned, Dow Jones Industrial also looking quite similar, and what you can do here, keep a very strict stop loss of 32,589 or 590, and the levels that we are looking here going forward will be 33,272 and 33,969 or 970. okay, the important thing that we are going to discuss is the dollar index, and I've said that dollar index started looking wobbly. Why it is happening, what's the reason for that, I don't know, but on the long term trend it does looks wobbly. Now as far as the very short term trend or the range is concerned, what you have here is something like this. So as you can see, a slight breakout has happened. As you can see, the breakout has happened, but whether it is a genuine or not, that's something we have to see. So if it falls below 106 again, it will again be in a bear grip. okay, below 106 the levels will open up on the downside, and it will be in between 104 and 104.5, and for an upside it has to sustain above 106.5, and if it does so, then we have 107.56, and probably we will move towards 108 as far as the dollar index is concerned. Now let's quickly analyze US Treasury and US 1-year yield. okay, so because 1-year yield has spiked, okay, let us see whether we can find 1 year or 2 year at least. okay, YT, yeah, this is the 1-year yield, bond yield, and you can see the spike. The spike is substantial and huge, and you can see the move, it's humongous. And technically there is a breakout. I have nothing to say apart from laughing. I mean, as far we cannot calculate the percentage of percentage, but you can see the kind of risk that has increased in the last 430 days, where the interest rate spiked up more than 7,600%, and more than that, it's a breakout. It's a breakout. Last time when it went up to this high in 2018, a sharp fall has started, but this time it has indeed make a breakout. So if you are looking at the chart of 1-year bond yield, it is what it is indicating is, let me show it to you. This is I may sound funny, but this is not at all funny, because the risk is immense. If US 1-year bond yield continues to sustain above 2.8, it is nothing funny at all, and it is very serious, because it can double from here. It can went up to 3.5, 4%, 4.5, who knows. Okay, so a breakout has happened. This is not at all good as far as the short term yield is concerned. It simply means the next 1 year market remains uncertain, and that's why people are asking this much premium. Okay, this may again be a trap. On the contrary, if this is a trap, then we will again see a down move. If this is a trap like this, it went up sharply like this, but if it is a trap, we will see a move like this as well, but there is no such indications right now. So equity market is showing good strength, but as I told you, go with the stop loss, because a short covering has stretched for more than 1.5 months. Things could look wobbly, and we have to see how things works out. And this interest rate is really freaks me out. Interest rate is not at all giving me any bullish signal, and it is indicating that something is coming which will increase further volatility in the stock market, and it gives me a sense of negativity. Bond yield really gives me a sense of negativity. So what we can do, we will quickly go and recheck the bond yield, and let us see what's happening over there. Only one data point is not, yes, you can see here this bond yield is really spiked up like anything. The 2-year yield, okay, 3.24, and this is 20 20-year 3.27. so they are very close to each other. This is not at all a sign of this is about to become flat, but not at all a sign of declining trend. Once the 3-month yield spikes up and holds above, let me show it to you. Yeah, so if once things looks like this, where the 3-month yield is trading above all the long term averages, then you will see either the policies need to be changed drastically, or the stock market started crashing down. So something big will happen here in 2000. So something big will happen. That's indicating, that's not only indicating, people always directly cope, because in the last two instances these kind of events causes big stock market crash. But is it only indicating the stock market crash, or is it indicating something else? Because we cannot directly correlate stock market crash. The central banks are so sensitive to that, because the US economy is highly dependent on stock market. Let's just understand that. And if the stock market crash 50-60% like in the last two instances, I'm not saying that that's not going to happen, but we have seen Nasdaq has also already crashed 30%. Maybe it's in the middle of the correction, that's also a possibility. But below a certain level, nobody, because things, this is not like other country where they are if their stock market is not working, they will be fine. If the government wants that, obviously they can do that, but we generally don't see these kind of things. So we have to see whether this bond market the negative, the spike in the yield and the negative crossover, we can see that whether it is indicating a stock market or something worse or something else, we don't know yet. So we have to be a bit careful, because bond market never lies. That's one thing you need to understand. There is a possibility that the breakout is false and it will again fall down or come down, but there is no such indications right now. So you have to be a bit more alert right now. Stock market on the long term, yes, there is no denial that there is no change in the trend, but I'm talking about the next 1 year, and bond market is indicating that things are looking very, very uncertain. So this is the end of the video. Thanks for watching.